MicroStrategy is just pioneering, it's kind of common sense. Your family wouldn't give away all your money and just say we're going to work harder. And a university wouldn't give away all its money and say we're going to raise tuition, cram the classes, cut the teacher's salary, and work harder. But conventional wisdom in finance is your company ought to dividend out its capital. It ought to buy back its stock. It shouldn't actually hold any capital on the balance sheet. And it should just raise its prices and tell its employees to work harder and cut its cost. And that, in a nutshell, is why 99% of the companies in the world underperform the Magnificent Seven, and why they all could benefit by just adopting Bitcoin as their Treasury reserve standard.
That was an interesting point you made about analyzing and coming to the valuation in terms of analyzing the performance of a company, right? Investors historically, as you mentioned, just look at a price to earnings, forward-looking ratio, or look at the profit and loss. How should investors analyze MicroStrategy? Because if you mentioned that, to give you a metaphor, MicroStrategy is the tap to that capital flow, as you mentioned. There's nothing else like that. Like, are you a Bitcoin bank? Do we analyze you similar to a bank? Or I've seen a simplification perhaps as analyzing MicroStrategy like a REIT, like a real estate investment trust.
Treasury.
That feels too simple. I mean, is there anything we can compare it to, Michael?
I think you got to look at the balance sheet and say, okay, that's one component. They've got this much Bitcoin. And then you got to look at the P&L and say, well, how much investment income can they generate? So if the company gets to $50 billion of Bitcoin, and if Bitcoin goes up 20% a year, the company generates $10 billion a year of investment income. And that compounds 20% a year. So if I said to you, hey, here's a big tech company that makes $10 billion a year, and they're growing that 20% a year, how would you value that?
I mean, through the roof, right?
There you go. So it's not very complicated. The thing that's held people back is we've used indefinite intangible accounting for the last 4 years, and it's not until 2025 that you actually start to do fair value accounting. And when you start to do fair value accounting, you can actually see investment income, and you can see the income potential. And so it's not complicated to figure out what the balance sheet is. Everybody knows, 252,000 Bitcoin. The complicated thing is to grasp the idea of a company that issues securities backed by Bitcoin. And the real franchise that MicroStrategy has is we're the leading issuer of Bitcoin-backed securities. So the question is, how much capital can we raise? How much permanent capital we have? And the second question is, how much leverage will we use, and how intelligent will it be? And the third question is, what's your forecast for Bitcoin, right? I mean, and so there's three variables there. If we borrow $10 billion at 7% and we invest in Bitcoin, and Bitcoin returns 21%, and we scrape 14% arbitrage on 10 billion, we make 1.4 billion a year in the swap. We roll that into the business, and then 10 years out, you've got $50 billion business, 50 billion in capital, and you're generating $10 billion of investment income just off of that one piece, right? But it all comes down to, what's the nature of the capital, how much can we get and raise, and then how will we invest it, and we'll be responsible. The haters, right? The haters think, well, Bitcoin's just going to go up 0% a year, right? So, of course, from their point of view, the balance sheet's going nowhere, and if Bitcoin goes 0% a year, you can't raise any capital, right? So if that's your forecast, you're not that interested. My view is Bitcoin's going to appreciate 29% a year ARR for the next 21 years, right? That's
Which
my
takes
base
us to
case.
what? What's the dollar figure on that?
13 million.
Per Bitcoin.
Yeah. Okay, and so what do you think my shareholders think? Well, my shareholders are pretty bullish on Bitcoin, right? There's no one buying MicroStrategy that hates Bitcoin.
No, they're shorting it.
Yeah. So at the end of the day, I mean, the methodology would be figure out what's your forecast for Bitcoin. By the way, you can go to Google, type Bitcoin 24. And you'll find the Bitcoin 24 open source model. It's a 21-year model. You can download it. It's a spreadsheet. You can put in your forecast for innovation rate, inflation rates, all the asset class, monetizations, demonetizations, Bitcoin assumptions.
Supply.
You can put that all in, and you can run your model, and you get your own answer, right? So do that. And then you just got to consider, well, how much capital do you think that MicroStrategy will raise via securities offerings? And after you do that, you decide, are we responsible custodians? And then you create a 5 or 10-year model for our investment income, and you figure out how much income can we generate and how fast can we grow. And of course, all those things are very integrated. And, if the more you know about the capital markets, the more enthusiastic you get, because we look and we say the convertible markets are inefficient, the preferred stock market's inefficient, the high yield market's inefficient, the corporate debt market's inefficient, the real estate market is inefficient. So, our view is we kind of want to be the Amazon of fixed income. We want to build a better product direct to a new distribution channel. And, I don't blame people for not necessarily understanding that, because sometimes you have to see it. And in the absence of, fair value accounting and the like, and 3-year forecast, and those, don't exist, it's a lot for people to grasp right now.
Well, you've even had to come up at MicroStrategy with your own measurement to measure the success of the strategy. You already mentioned it earlier on in this chat, the BTC yield.
Yeah.
Currently, year to date, that's around 12.2%, that yield. But over the next 3 years, according to your most recent quarterly report, you're targeting something between, I think, 4 to 8%. Is that correct? so that then implies a diminishing in that yield. So once it decreases or compresses that yield, what happens then? Do you need to come up with another means to convert capital?
Let's just focus on BTC for a second. What is it? It's the rate of increase in Bitcoin per share. So if I think we're getting close to almost an 18%, like 17% BTC yield for the year so far. And that means that between January 1st and today, you've gotten more than 17% more BTC per share. If I gave you a company and I said it's got a dividend yield of 17%, and I give you another company that says it's got a dividend yield of 0, it's like, well, you would value the second one based upon the underlying asset, but you're not getting more. But the first one, you would actually take the underlying asset, and then you would take the yield, and then the question is, how long will they generate that yield, right? And what's the average yield over the lifetime of my holding period? So in that case, you could say, if I expect 4 to 8% yield, you could put a 10, 20, or 30 PTE on that. Sometimes people will, it's basically your earnings per share in a way, but, we can't really call it that because it's a non-GAAP measure, and it's a Bitcoin per share type measure and that's valuable to people that love Bitcoin. But when you think about it that way, right? The simple model there is the company should have a premium equal to the multiple of the yield, right? If you think the multiple should be 20, and if you think the yield will be 8%, then you could say the company should trade at 160% premium to the underlying asset, right? So the ability to generate that yield will justify that premium. And it's a simple model, but it's not the whole model. The real issue is how you generate the yield, and the way you're generating the yield is through issuing securities to the public market, that generate that yield. And one way to do it is by issuing equity at a premium. That's a simple way, the most simple way imaginable, right? Another way to do it is to issue convertible bonds at a premium to the equity, which may or may not be at a premium to the asset. That's a slightly less simple, but still kind of straightforward way to do it. A third way to do it is I just issue a fixed income instrument that pays 7%, and I buy Bitcoin with it that yields more than 7%.
Which is what you're doing.
Right, well, technically, that's not exactly what I'm doing right now. What we're doing right now is we've issued equity at a premium, and we've issued convertible bonds at a premium. If the company in the future were to issue preferred stock that had a fixed thing, or issue bonds, corporate debt, or something that had a fixed coupon, then you would be swapping the fixed for the Bitcoin return. And of course, in that case, look, if your forecast for Bitcoin is to go up 7% a year, and the company's paying 7% for their capital, there's no yield. You see, right? If your forecast is to go up 21% a year and the company pays 7%, there's a big yield, right? And so if you use BTC yield, then you just think about what's the company going to do to get to it. And we've just got lots of different tools to get to it. And there's other things. There's 1,000 things you could do, right? I'll keep it for the sake of our interview to just those few because they're simple to discuss. And, our guidance, our target is 4 to 8%. We've done more than double 8% this year.
So it feels pretty conservative then.
Well, I think we try to be conservative in our guidance because we don't want to disappoint our shareholders. But clearly, we will pursue our objective, as rapidly as we can in a prudent fashion.
Should we talk about the Bitcoin revolution?
Yeah.
You already spoke.
It's all Bitcoin.
In part 2 of this interview with Michael Saylor, he explains what could be Bitcoin's next big moment.
Banking is just the next logical step.
And is that not exactly what Bitcoiners don't want to happen?
Right, like at the end of the day, you have an OG crypto community that's very hardcore about it, but if you look at where all the money is, 99.9% of the money is actually in the traditional economy. And in the war for the future of money, the war's going to be won with money.
Right on.